All right, let's find out what's going on in the global economy. We have Ini John McQuarrie, and she is wearing, I'm a little colorblind, but it's kind of reddish.
We're in a red world now. It's a war world we're living in, so we have to reflect it in our
Exactly.
outfits.
The markets are red right now, except you're invested in oil, then you're doing better.
You're still glowing.
And if you're government and you're oil producer, you're getting more revenue, but you have to find a way to channel that to the pumps.
Yeah, like Nigeria is getting more revenue, but the people are suffering more. I don't know if you saw the papers. Nigerians are asking for intervention from the government. But of course, the government has to be very calculated intervening.
The subsidy is not back.
Yeah, because it's a deregulated market. But there are still ways to go about it. For instance, we know that Dangote is the only refiner. Let me not say major. It's the only
refinery.
Domestic refiner we have in the country. Yeah, and I mean, the government can go through Dangote to help to one way or the other. Don't call it subsidy. Call it intervention.
Let's give another name.
Call it intervention. Whatever you want to call it. But I mean, it's buying petrol at least 1,332 naira for a liter. It's a big one. I mean, I know you're still able to use your perfume and look good, laddie, but it's not like that for a whole lot of Nigerians feeding themselves and their children. I know of someone whose child had to stay at home because they're not able to meet up with school fees. So it's getting squeezed. That's talking about their purchasing power. It's becoming squeezed. The basics are getting squeezed. So the people need the government at this time. I know politicians are really busy. We saw the APC governors yesterday in Lagos with the president. Yeah, where election will start in January and they're strategizing, but the people also need the attention of the government at this time.
You and I need attention, at this point, because I know the pain I feel when I buy fuel in my car. It's so painful.
Laddie, I bought petrol in my car this morning. I feel no pain. I'm good.
You feel no pain? Wow. You need for president.
You need for president, please. Good morning, everyone. Well, sorry we had to go that. It was a reality here in Nigeria, and so there's no way we can turn blind eyes to it. It's the reality that we are facing. Yes, the world is also facing it, but since we're in Nigeria, of course, we bring the perspective of Nigeria. So let's go global now. Start with expectations for the week and see some of those data that the world is expecting that will most likely determine policy decision for different countries. We start from Japan today. We're expecting the consumer price index for February, and also Singapore, the consumer prices core. Consumer prices, what we're expecting. Tomorrow, Tuesday, from Eurozone, we're expecting their flash PMIs, a lot of it plus production PMI also be expected. In the United States, we expected the Q4 productivity data and also the non-farm productivity for quarter on quarter. We're coming to an end of the first quarter of 2026, so it's time to take records and know what has been happening. Of course, we know it's dominated by the United States and the President Trump's action. In the United Kingdom on Wednesday, we're expecting consumer price index, Australia key CPI, that's the consumer price index also, and in China, on Wednesday, the medium-term lending facility operation is what we're expecting. And then on Thursday, we'll go to Taiwan, where we're expecting the February employment and unemployment data. Also on Thursday, we're expecting France manufacturing business climate. And on Friday, some numbers coming there from Europe. We expect European Central Bank consumer inflation expectations. Not the real numbers on Friday. That's the expectation from the ECB, and also France unemployment benefits. Of course, you know that France is also part of the EU. And then from the US, consumer sentiment, the final one. That's what we're expecting on Friday. Now, going to the stories proper, of course, dominated by the war and consequences of the war. 2 additional Indian flag vessels carrying liquefied petroleum gas are making their way through the Strait of Hormuz. Ship tracking data shows that following a route taken by other ships approved by Iran, and we know that Iran had said that, well, there are some approved countries that can use that Strait of Hormuz except the United States. Well, the Jag, Varsant, and Pine Gas, 2 India-flagged very large gas carriers that travel through northwards from the UAE coast towards Iran's Qashim and Larak Islands, and that happens early today, early Monday. And Goldman Sachs says that it's updated its Eurozone area outlook, and they're now expecting that the European Central Bank will deliver 2 rate hikes, not cuts anymore, as persistent energy-driven inflation pressures offset and weaker growth. And the move follows higher energy price assumptions amid disruptions in the Middle East. The bank said its commodities team now expects shipping through the Strait of Hormuz to remain at about 5% instead of, well, almost 90% to normal levels for 6 weeks, leading to its, they see a high energy prices for longer. Brent, of course, we've seen this morning, Ladi told you how Brent has hit $114 at this time. And talking about Europe now, their natural gas features resume gains as traders are watching the US-Iran exchange threats over the Strait of Hormuz, adding nervousness to an already volatile market. And benchmark contracts rose more than 5% in early trade, wiping out the previous session's decline. On Saturday, the United States President Donald Trump gave Iran 2-day deadline, expires today, to reopen the Hormuz or have their power plants bombed. So today is a day everyone is watching the US and watching Iran because the deadline that President Trump gave to Iran expires today. Now, in China, the state-owned refiners have begun exploring purchases of Iranian crude. After Washington allowed the sale of some, Washington allowed some of that Iranian load or crude to be loaded into tankers in an effort to limit price rises because of the Middle East war. And we've seen the impact of that. WTI, which comes from the United States, we've seen the price reduce, not surging as much as Brent. Well, representatives of National Iranian Oil Corps and traders who are acting as intermediaries have also been quietly sounding out potential buyers among these and other Asian refiners. So China is also joining the United States. Remember, the United States had to lift sanctions on Iranian oil so that they can improve their supply, and we're seeing the impact of that. Well, beyond oil, we see corn futures rose to a 2-week high as disrupted fertilizer supplies from the effective closure of the Strait of Hormuz cast doubt over the size of the upcoming U.S. crop. Well, the most active contracts rose as much as 1.1% today after U.S. President Donald Trump over the weekend threatened to escalate the war with Iran if the important trade route was not reopened within 48 hours. And the Middle East is a major fertilizer exporter, and prices for the nutrients have jumped since the outbreak of the conflict. So beyond oil, we also see fertilizer and commodities connected to it affected. Guess what? Gold is also there. Gold prices fell sharply in Asian trade today as concerns over inflation and high interest rates sought safe haven demand for bullion, even as the U.S.-Israel war is raging on. Monday's losses saw gold largely wipe out all of its gains for the year. Well, developments over the weekend, specifically U.S. President issuing that 48-hour deadline for Iran to open or reopen the Strait of Hormuz pointed to potential escalation in the conflict, especially as Tehran has warned that they are also ready to retaliate. So we saw spot gold slid 4.6% to $4,287.05 an ounce, while gold futures also dropped more than 6%. And spot gold was at its weakest level since late December. Commodities market, South Korean stocks, they fell sharply today. Investors are viewing the Bank of Korea's new governor, Shin Hun-song, as a more hawkish pick, especially at a time like this. Well, South Korean markets were also caught in a broader sell-down in Asia amid growing concerns of a worsening conflict in the Middle East, although the Kospi was by far the worst performer in the region. The Kospi slid 5.8% to 5,409.17. I'll give you an update of that by the close of trade. That'll be Nigeria's intraday hour about that period, 1:30 p.m. during Business Incorporated. And away from that, Japanese companies have agreed to raise wages by more than 5% for a third consecutive year. Early results from annual labor talks showed are reflecting sustained gains in pay that policymakers see as key to fostering durable economic growth. Japan's largest labor union umbrella group says that 7 million members said its preliminary tally showed an average wage hike of 5.26% for the year. I bet Ladi would like to have this news also in his pocket, but Ladi has to hold on for just a bit. And that's all we can take for global news at this time. I'm Ini John Mekwa.